What the heck is going on? Why is Bitcoin below 80K after a 40% drawdown, which is its biggest since 2022? Why do some believe that it's going to get worse, with prediction markets calling for 59K Bitcoin this year? Something big is happening under the surface. We just saw the Bitcoin mining adjust down by more than 3% and projected to go down by almost 15% in 6 days. This means that someone in the Bitcoin mining world is even blowing up. Is it because the market is spooked by Kevin Warsh, the new Fed chair, shrinking the Fed balance sheet? Is it because of the fact that Epstein emails show that elites have been trying to suppress Bitcoin since 2011, and maybe now they're able to do it? Is it because a $1 billion Bitcoin position was liquidated in 5 minutes? Or is it because we're living through the repricing of all assets in light of a global monetary reset? In less than 15 minutes, I'm going to highlight why Bitcoin is collapsing and play a clip from an exclusive Simply Bitcoin interview with Jack Mallers, who shows us exactly what's happening right now and why you need to pay attention. This is Dante Cook with Bitcoin Simply. Let's go. Bitcoiners are shocked right now. On Friday, they thought Kevin Warsh, the first Bitcoin Fed chair, was going to send Bitcoin prices up. Kevin even owns 9 Bitcoin himself. Instead of calls of congratulations from the homies with the price ripping, you were getting margin call. And you thought your 10K margin call was bad. Well, what about the dude that got liquidated for $1 billion on Friday, which sent Bitcoin prices off a cliff? We even dipped below 78K. The Bitcoin market is in shambles right now. Bitcoiners are fighting for their lives like Leonardo DiCaprio in The Revenant right now, with bears mauling us to oblivion. Bears like Peter Schiff who are getting active right now. He's highlighting the decline in Bitcoin, which is down 40% from all-time highs. But he's also neglecting the fact that silver was down by over 30% on Friday, the largest drawdown in a single day in 75 years. In gold, oh yeah, it was down by 15%. That's $4 trillion. Something bigger than just normal market moves is happening right now. So here's my first thought on why the market is imploding. It's reacting to the news of Kevin Warsh. People are going back and playing old clips from him talking about his stance on the Fed balance sheet being way too big. And they're being spooked by it because the market has been ran by central banks over the past 40 and 50 years. As they print money, asset prices go up. But that's not the new regime that he's signaling based on his past history and policy thoughts. Listen to this clip and understand exactly why the market was spooked.
It's in the room. It hasn't been that big of a deal. We know it when we go to the grocery store. But we also own financial assets. Maybe we own some Bitcoin. 52% of our fellow Americans own no financial assets. They don't have equity in their house. They don't have an account at Schwab. They don't have an account at Coinbase. They're living off their W-2 income. And this surge in prices have destroyed them. Yeah. It's the most regressive tax any government could ever come up with. Imagine if we had a central bank that had been deadly focused on that. I think we wouldn't have taken a divided country and made it more divided. When we have a big balance sheet, we're asking for the inflation that came. And as a final point, my own judgment is the story that I hear from many of my peers. Well, the inflation, well, that's not really the central bank's fault. That's because of Putin and the pandemic. Nonsense. A change in prices happens in a market economy because of shocks in the world. Changes in prices happen every day. That's not what inflation is. Inflation is when that change in prices become embedded. It's second and third order effects. And that's what's been the biggest harm to the country. My recommendation is a smaller balance sheet, takes the Fed back to a more manageable size, a more serious job. And interestingly, if you can have a smaller balance sheet, you can have lower interest rates. Back to you.
How much smaller?
So when I joined, the Fed balance sheet was about $880 billion, included a bunch of foreign currencies. We do need some balance sheet to take to do our underlying business, to help run the treasuries, to help be a good counterparty to the rest of the central banks in the world. The economy's obviously grown since then. I wouldn't want to put a precise number on it, but right now the Fed balance sheet is about $7 trillion. They are participating in almost every banking market, almost every day. The world has come to rely on the central bank's massive imprimatur. I would say it is trillions larger than it needs to be. We can't make this change overnight. But if markets knew that our objective was to get to a balance sheet that was as riskless as possible and as small as possible, and we would get there in due time and with a strategy, I think markets and market participants could well adjust to it. The central bank could then be a powerful central bank, but a more limited one, and I would argue wouldn't find its way in harm's way politically or economically.
Let me tell you why this is the wrong take. People think that the Fed's balance sheet getting smaller means that the US is no longer pro-growth. They're going to cut interest rates. That is a fact. But what they're doing is they're shifting power from the Fed to the Treasury. Scott Bessent is going to have more power than he's ever had, which is what it's been like in more parts of history. Think about Alexander Hamilton. Lower interest rates are going to facilitate higher growth, which is actually good for Bitcoin. And analysts out there has actually predicted that Bitcoin's price movement actually aligns with the economic and business growth. As the PMI goes up or the business cycle goes up, well, so does Bitcoin. And this administration is pro-growth. This chart, the correlation between Bitcoin and M2 money supply growth, has been the Bible for Bitcoiners and investors for the past decade. But I believe that this is no longer the case because central banks are no longer, mainly the US central bank, is no longer going to be printing money the same way that it has in past decades. The deficit has gotten out of order, and inflation will rise if we do that, making the affordability crisis in the United States that much worse for everyone in the middle class. And the United States is pulling out of the global sugar daddy role. Treasuries will have to defend their own currencies on their own, and that's why they're buying hard assets like gold and silver. But here's the gangster move that the US is doing that no one is still paying attention to. They're building a new global banking reserve through the form of Tether, and it's happening right in front of our eyes. Tether just released their Q4 attestation, which showed that they had over $10 billion in profits, and they have over $141 billion in United States treasuries. They are the fastest growing central bank in the world that is not a central bank. They are the people backing the United States Treasury apparatus, not other global central banks anymore. They're shrinking the Fed's role and increasing the Treasury's role. And they are going to roll these assets into hard assets like Bitcoin, which is just a $1.5 trillion asset class. And this is all part of a larger theme. And I'm going to show you exactly what's going on. And I think Jack Mallers hits this on the head in an exclusive interview between Nico and Jack Mallers at the Plan B conference earlier this year. You have to understand where Bitcoin is at in this monetary cycle and what's happening in the larger picture. But before we get to that, let's thank our sponsors. Ledn has been the leader in Bitcoin-backed loans since 2018, allowing you to unlock liquidity in your Bitcoin without selling your Bitcoin. You're allowed to borrow up to 50% loan to value of the Bitcoin you post onto the platform. And that's why they can lend so fast. You either have the Bitcoin or you don't. Fiat will land in your account in less than 6 hours. Application takes just 2 minutes. They've never lost a single cent or sat of customer money because they put your Bitcoin in a cold storage wallet that you can see directly in the dashboard. Loans start at just 12.4% and half of what you will with a credit card. And there's no credit check. Go to learn.ledn.io/simply to get started. One of the ways you can avoid this monetary collapse coming up is by ensuring that your assets are removed from the system. The way that you can do that is you can become your own bank. You can run a node. You can do it securely, privately, and confidently. But you need the help of an expert to do this the right way. And that's why we partnered with the Bitcoin Way to help you remove your Bitcoin from exchanges, to run a node, to do so privately, and to hold your private key so that if and when the system collapses, you're ready and you're prepared. Go to thebitcoinway.com/simplybitcoin to have a meeting with an expert to walk you through what this means and how you can do this properly. And here's the clip we've all been waiting for.
So, call it for round numbers 100 years ago, we entered a monetary standard built on top of the US dollar. So Bretton Woods, almost 100 years ago. And the idea was after the world wars, the world is utterly and completely destroyed, right? There's never been more human destruction and just general destruction globally than the world wars. And so the United States, and listen, history is written by the victors. I'm 31. I have no fucking idea what actually happened, but I can only recite what I was told, okay? So that's my disclaimer. But Bretton Woods was the United States saying, hey, we have the strongest economy, the strongest manufacturing base. If there was a winner in the global destruction of the world war, it was us. And we want to help the world build back better. So we have all the world's gold, we have all the world's productivity and the strongest economy. How can we export our strength to the rest of the world? Japan, Europe, Eastern Asia, all destroyed. And so they said, well, we will export the dollar, our currency. That's the way of us exporting our strength. Okay? And the rest of the world can produce stuff for us. And so we will stop producing so much domestically and locally. And yes, it will harm our domestic production, our economy. It surely will hollow out some of the industrial base internally in the United States, but in an effort to help everyone around the world get up off their feet. And that was the new global order at the time to help a post-World War II. And it was a very simple agreement. The US would simply print more dollars than they earn and ship them out all over the world and import stuff, food, electronics, production materials, everything that we consume, so I consume as an American. Okay, I would say that the world is now back on its feet. And unfortunately, what comes with that agreement is the United States has to run persistent deficits. What comes with that is a tremendous amount of debt. And eventually you run into a dead end where you have $38 trillion worth of debt. Nobody wants to own your sovereign debt anymore. And so what we're seeing is a new monetary reordering where what we know as fiat currency is dying before our eyes. Now you have to ask yourself very practical questions. These sovereign debt markets, these nation state treasury markets, they're tens of trillions of dollars in size, okay? Bitcoin is $1.5 trillion in size. To give you guys context, China's trade surplus last year was over $1 trillion. So if China simply just tried to pour in their productivity from the calendar year 2025, they would have ruined the Bitcoin market entirely. They almost made more money in 2025 than Bitcoin's entire market cap. And so what is an asset, a neutral asset that gives you relative property rights that can absorb the size of sovereign debt as we transition? And the answer is gold. Now, do I think gold is going to solve the world's problems? In fact, I know gold's not going to solve the world's problems because it already failed at solving the world's problems. And we haven't made gold any more decentralized, any faster, any lighter. It hasn't gotten any smart contract capabilities. I can't submit a pull request to the gold repository on GitHub. So I already know gold is going to fail at this roll. But it's the only instrument that has the relative size to help a Russia, a China. I mean, the United States is very open right now that it is us first. Globalism is dead. We don't care about you more than us anymore, and we are willing to violate your property rights in order to do what we think is important for us. Oh, your country is Venezuela? Not anymore. Oh, you have Greenland? Not anymore. Oh, Russia, you have reserves with us? Not anymore. And so countries need to find something that can grow to $50 trillion in size in a reasonably painless way. This is a long rant. That's what's happening with gold. And as a Bitcoiner, I'm okay with that. Listen, I wish this was happening when Bitcoin was ready, but it's not. Bitcoin's the size of Tesla. So I've consistently thought today, where we are right now, not where I think the world is going, not where I hope the world is going, today, Bitcoin is some combination of technology plus fiat liquidity. The fiat liquidity piece makes it debasement trade-esque. It is very expressionist of currency debasement. It tracks USD liquidity almost to a T, which means when dollars get tight, it goes down. When dollars get abundant, it goes up. But there's also a technology piece to it. It does trade like a tech stock. It's the size of big tech. It trades like monetary big tech, like as if big tech invented better money. And that's where we are right now. And so I think gold front runs liquidity. If you look at US dollar liquidity, it's actually going down right now. Markets are getting tight, okay? And so I think Bitcoin will respond to the inevitable liquidity that's coming during this monetary regime change. And gold is front running it because it's the only neutral tool available for sovereign nations to reorganize themselves at the scale required.
Here's where we are in the process. Here's what's happening on the global scale and what's been happening the last 80 years. Bitcoin is at the beginning of a new monetary revolution. Bitcoin is the size of Tesla right now. It trades like a tech stock, but it is going to be the future absorber of global liquidity. And what's happening with gold and silver is actually a good leading indicator that people all over the world, it's not just us on podcasts and Twitter and everywhere else, do not believe in fiat currencies moving forward. Otherwise, gold and silver would not be ripping the way that they are. They're $8 trillion asset class, $35 trillion asset class that has doubled overnight, which means that Bitcoin can double in a blink of an eye. The global flows that will move when the system collapses on itself and trust is no longer embedded in the digital economy is going to be massive. You don't understand the moves that are going to happen in Bitcoin. So if it going from a $1 trillion asset to a $10 trillion asset class is more likely than you think. We are in the early stages of the reset that's happening globally. And Tether is a signpost into the new digital world and the digital sovereign central bank that we're moving into. And Besson and Warsh know what's happening. They're going to let the old system melt down and they're building a new system behind closed doors. The question is, do you have the sort of resolve that's going to be able to allow you to experience the gains that happen when this does, or are you going to be a short-term thinker? This is Dante Cook with Bitcoin Simply. And one of the ways that you can get into Bitcoin mining right now, even though the big miners are capitulating, this is a great opportunity for individual miners because you're able to earn more profits per the Bitcoin that you have or the Bitcoin mining equipment that you put into the network because the mining difficulty is going down, which means there are less miners for you to compete with. Well, you don't have to worry about any of that. Just send your money to SAS Mining. They'll set up a mining rig and exchange and have sats flowing directly to your wallet. There's all sorts of benefits that you can experience through Bitcoin mining and not just buying spot Bitcoin. Use the QR code to get started today. Thanks for rocking with me today. This is why Bitcoin is crashing right now. And you have to understand the larger picture. This is Dante Cook of Bitcoin Simply. Happy stacking.